Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Morgan Stanley plans to develop Bitcoin custody and trading infrastructure as Ethereum unveils an ambitious roadmap through 2029, while insider trading allegations shake multiple crypto platforms. Morgan Stanley, managing nearly $9 trillion in assets, announced plans to build Bitcoin custody and trading services in-house. Amy Oldenburg, head of digital asset strategy, confirmed at the Bitcoin for Corporations conference in Las Vegas that the bank will develop these capabilities internally, rather than rely on third-party solutions. The firm is also exploring Bitcoin-based yield and lending products, marking a significant shift for traditional finance as institutions continue integrating digital assets into mainstream offerings. Ethereum released its most ambitious technical roadmap in years. The Ethereum Foundation published a draft plan outlining 7 hard forks through 2029, with researcher Justin Drake presenting 5 core objectives. The roadmap targets reducing transaction finality from the current 16 minutes down to as low as 8 seconds, dramatically increasing throughput to support 10,000 transactions per second on Layer 1, implementing post-quantum cryptography to protect against future threats, and building native privacy features for shielded ETH transfers. Vitalik Buterin endorsed the document as very important, describing the approach as a ship of Theseus-style progressive rebuild. The straw map acknowledges development timelines could compress if AI-driven tools accelerate progress, though Ethereum's history shows ambitious deadlines often face delays due to decentralized governance. Insider trading allegations are rattling the crypto industry. Blockchain investigator ZachXBT accused Axiom Exchange employees of misusing internal tools to track private user wallets and conduct insider trading. Brox Bauer, a senior business development employee, allegedly accessed sensitive information, including wallet addresses and user identities, to monitor influencer trading activity since early 2025. Separately, Terraform Labs filed a lawsuit against Jane Street Capital, alleging the trading firm used non-public information during Terra's collapse in May 2022. The lawsuit claims Jane Street withdrew approximately $85 million minutes after learning of Terraform's planned liquidity move, potentially accelerating the ecosystem's $40 billion collapse. Bitcoin is currently trading around $66,139, consolidating after touching $70,000 midweek. Ethereum sits at $1,961, testing critical multi-year support levels. US spot Bitcoin ETFs recorded $1.1 billion in net inflows over 3 consecutive days this week, with BlackRock's IBIT capturing over half the flows. However, options market data shows institutional players are aggressively buying put protection at the $60,000 strike for 6 to 12-month expirations, signaling concerns about downside risks despite recent price recovery. Congress passed bipartisan legislation called the Promoting Innovation in Blockchain Development Act to protect software developers from criminal prosecution under money laundering statutes while working on open-source blockchain projects. The bill responds to recent prosecutions of crypto developers and aims to ensure neutral technology development without legal jeopardy for non-custodial software creators. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.